Hello and welcome at Stocks Advisor channel. Here at our channel we are looking for interesting buy opportunities for US-based stocks. In today's episode we will talk about Citrix Systems Incorporated, traded at Nasdaq, ticker name CTXS. Well, CTXS of course now is observing a decline, already fourth day. You can see here we finished with a small doji-like candle with very big downward shadow and somewhat upwards, which overall is working as kind of a bullish indicator because it looks to be very reversive momentum, and it is indeed the case. So we will see now why and how to trade further. But overall, what you see that this is happening after quite long time of a nice growth, which went actually in two major channels. So the first time we started by November, where we finished our growth with a really nice stable channel, and then kind of a longer and more volatile actually channel took place, which was actually happening by mid of December and all the way until actually a few days before. So if you look at this channel, you can clearly see here that this went with some break up and down, let's say attempts and breakages that took place by beginning of the year, in mid of January, by end of January, also by mid of March. But overall it was really nice and stable channel. Now it's broken completely, we are declining, and what is important here that MACD wise we are finishing actually the first negative wave. It looks like we are bottoming, so any moment we might have a very strong upwards move because the upwards pressure is built here by MACD histogram. Also, if you look at RSI, we're quite low, but this is not developed RSI. It's due to first decline, meaning that those who were with profit at the beginning, they actually now have losses. Therefore, their RSI is 25 at the moment. But if it would be only the first moment, I mean the first day after decline, you could still say this RSI is not relevant, but after a few days you can see a lot of volume is being traded, so there are new traders, new people sitting in the position. Therefore, the chance that they will leave for now, it's not that high. If you look at the bigger magnification here, I mean bigger scale, you can see that overall we are in a very nice shape because there is a strong, let's say, trend where the price returns all the time, and it was seen through that, let's say, more than half year period from previous summer. This is between 130 and 145. We are lower than it, but now it works as a very strong attractor for us. So for midterm traders, this would be the attracting point. For daily traders, we need to catch the wave and to know how to enter. And therefore, with this respect, if you look here, you can see that actually with a little bit of magnification, you can see that we are now sitting at a very interesting support line, which is between 120 and all the way to 124. So let's not talk about cents, we just go to principal numbers. So this could be our first entry opportunity. Actually, we can write it as the first call out here. So it will be 120 to 123 to buy in, 124, sorry, to buy in, and this would be based on the expectation of the technical rebounds from the current levels, and there you can make the profit if rebounds takes place. And speaking of profit here, of course, we also can say that we might return all the way to actually 130, even higher, but in general, here on this chart, profit taking is advised from 10 to 15%. Once you have it from the money allocated in the position, just take it because this is the best way to do. What might still be happening here, we might still have, let's say, the rebounds upwards, but then further decline might take place because if you look at moving averages, they are all about starting to go down, and we can still go lower. So moving averages 20 and 50, the green and blue line, most probably will work both as attractors but also as resist levels. What does it mean? It means when the price is much lower than these two levels of moving averages, they work as attractor. But if price is higher, if the price is close to those, then they will work as resist. So you can imagine and continue this line, maybe somewhere like that. And it's more for schematic representation, of course, because we don't know exact dynamics, but this line will work as a very strong resist level here. And then what you might have let's say as a trading strategy. So let's make this line thicker. As in a trading strategy, what might be happening, you might have a situation where we will just bounce upwards and downwards. So it will be upwards bound, then a further, let's say, downwards move, etc. So kind of zigzagging move, lower levels. Therefore, the first level we can play already buying from here. If we speak of going lower levels, we need to go look at the bigger scale. So these would be to average down anything between 110 and all the way to actually a little bit lower here, 115, something like this. Yeah, so this would be the second level to buy through. Let's write it again as a call out for us. This will be 110, 115, and this will make it a second buying opportunity based on the fact that the first one is already played and rebounds on zigzagging or immediately neglected. This also could be happening. So in both cases, these are two technical levels to buy. And then what we need to take into account, of course, is the risk mitigation due to negative catalyst kicking in. If on top of this decline we have anything else coming, then this could, of course, shoot the price lower, although this is not completely expected situation. But if this is going to happen, these are the levels to buy in, which will be between 99 and actually 103, around that. So let's write it again as a last call out for us. So 99 and 103. Again, I'm not focusing on cents here because the most important is actually the dollar value. So this is the third level to buy for risk mitigation, because that's always what we do as part of our mixed analysis at the channel, where we discuss a technical situation, we discuss support resist levels and non-linear averaging buying through those. And the third level we always keep to mitigate risks due to negative catalyst kicking in. This could be a news-related situation, or could be a global market-related situation, or whatsoever. So anyway, with this way, you are very well prepared for this. And then, of course, on the rebounds, the profit should be taken again. For daily traders, 10 to 15%. For more midterm traders, you can expect returning to, let's say, to the channel 130, 145. Just to remind you, that's indeed possible to happen. Just look at this price action that was taking place in 2020 by actually almost, let's say, beginning of April. Here we were already on the recovery move, and the RSI and all other parameters were very similar. So also similar rebounds was taking place actually in October period. So this stock is very known for these massive moves. Also the higher heights we had here by June. So we could easily have it, and actually it's a very nice opportunity to buy. Very well echeloned levels of support, so should be quite safe and easy play. And speaking of how you buy here through, is still a classical 5-portion play. What does it mean? For those who are not first time at our channel, they know. So it means that the funds you would like to play here, you can split in 5 portions. Then you can buy with 1 portion in the first channel. You can then average down with another 2 portions in the second channel if the first channel is not confirmed, or we have one rebounds from this red resist level. And then you can buy with remaining 2 portions if, and very rare case, if there is negative catalyst shooting the price really low. So while others will be exiting with losses, you just buy in and prepare for the profit. And with this way of trading, it sounds a bit contradicting and funny, but the worse the situation gets after you buy in the first channel, the better is for you, because you can buy even more at the lower prices. So this is really a optimization for best profit taking with the worst case scenario. Although it might take a little bit more time, in that sense, actually we don't take losses, but we spend with time, let's say. Well, when those who take losses, cut losses, and go for another positions, they pay with money but save some time. So a little bit different approaches, but this one is not that dramatic to observe, having read at your accounts, and if you are okay to spend a little bit more time but still exit with a profit, I think this way of trading is right for you. So follow this opinion if you like. And therefore, actually, this concludes the story about Citrix systems at the moment. Good luck with it. Don't forget to press bell button, subscribe if you like the video. This way you will not miss our new videos and new interesting discussions for US-based stocks.